Hello everyone, I'm Kunal Sodhani from Global Trading Center, Shinhan Bank, India, and we are here once again with another episode of understanding and analyzing global as well as domestic factors and our views on several currency pairs. So, if we start with the domestic factors, the most important is flows. And when we talk about flows, equity flows definitely remains quite dominant. For the month of January 2025, we have seen outflows to the tune of 78,000 crores, while for the month of February till date, we have seen outflows to the tune of 28,000 crores. While even if we talk about the debt flows, they have been negative to the tune of 3,000 and 2,000 crores, respectively in Jan and Feb. So overall, almost around 110,000 crores of outflows till date for 2025 has been seen. So flows has not been positive. Even if we talk about the global markets at large, they have been very volatile when it comes to the Trump trade. And if we talk about the Nifty, I think it's somewhere resisting that 22,800 mark. And we believe that there remains scope where we can see levels testing around 22,400, while on the right side, 23,400 acts as a resistance. But if we move on of what's happening with RBI, we have got the recent bulletin of RBI where the data suggests that they have net sold basically dollars of around $15.15 billion for the month of December, versus it was around $20 billion in the month of November. Overall, if we also talk about the global trajectory, Brent crude prices remain quite consolidating between $74 to $78 per barrel, somewhere that is consistently being around those levels. While the base metals, particularly for about gold, silver, they have been rallying because of the risk on risk off scenarios which are getting created because of the uncertain volatility and the dispersion happening because of the Trump tariffs. If we talk about the Trump tariffs, the discussion remains that they will be effective or active from April 2nd. And there have been talks to the tune of 25% of tariffs on pharma and semiconductors as well. But again, the timing has not been known, so the markets remain jittery because you never know one fine day when it could be the date. Apart even can be earlier than April 2nd, which makes the market nervous. If we also talk about the ECB as well as the Bank of England, further rate cuts are expected from them. Definitely, we saw a print which was higher from UK with respect to their inflation print to 3% versus the expectation, and the last figure of around 2.7, 2.8%. So that print is higher, which is a concern for Bank of England. But I think we still remain optimistic on the rate cuts from ECB as well as Bank of England. But when we talk about Fed and the FOMC minutes were also released recently, the FOMC minutes clearly stated that they will be evaluating, how the impact of Trump tariffs will take place. Data points have been supportive, but they still don't. Any of them or any of the members were not that keen towards the rate cut. So I think rate cut goes, zero for obviously the month of March itself. But even now, if we draw a longer trajectory range, I think June would be the month where possibly if things go well and the tariff rates don't affect the markets or the remittances globally at large, then possibly June could be a month where a rate cut possibly can be seen by the Fed. Overall, for dollar rupee, we have been witnessing 87. It has been trying to breach that big figure 87, but again holding that mark. Overall trajectory remains that 86 half, 86.40 particularly remains as a good base, while 87 big figure now acts as an immediate resistance, followed by 87.35. So that's all from our side, friends. A quick update, and hope you find our insights useful and really find it interesting as well. Thank you so much for your time. Thanks a lot.